to the top story of the day. The August trade data number has come out, which has come in largely unchanged, remaining just below the $8 billion mark. Surabhi Upadhyay joins in with a panel of experts to dissect the numbers. Surabhi, it's been quite flat, and we have our experts with us. We have Rupa and Dharmakirti. Rupa, let me come to you first. Can you just sort of tell us what you make of the numbers right now?
No, numbers continue to exhibit weaknesses in global demand for India's exports, and exports staying flattish means that the same weak trend has continued.
Okay, let's get Mr. Joshi in on this as well. So, Mr. Joshi, as my colleague said, trends are absolutely flat. The trade deficit remaining at around 7.7 billion, the import figure at around 21 billion odd. So, not much has really moved on that front. The export needle, beg your pardon, at about 21 billion odd. What do you think of the numbers? And are you expecting any sort of a recovery anytime soon?
Well, I think there was a mild hope of recovery when exports had started moving up a little bit, but I think that's been completely belied by the data that came out in July as well as in August. And I think today's data tells us that the global weakness continues because exports to many of the countries like US, EU, etc., have fallen, continue to fall, so to say. And the imports, the good news is that the imports are falling faster than the exports. So what that does is that keeps the trade deficit under check. And I think the current account deficit is going to be pretty low for this fiscal as a result, or the last fiscal, 15-16 as a whole. So I think the surplus, it could even be surplus. I think some people say that in the quarterly data that is going to come out. But I think the point as far as the export growth for the next couple of months is concerned, I think we see a tepid growth, but we do expect exports to move into a positive territory, largely driven by the very, very low base of last year. And the global challenges to exports will remain. But I think in this overall story, there are some very, I would say, little bright spots emerging. One is, I think, the textiles and the gems and jewelry segment. I think they have registered good growth, and they are labor intensive. So that's a little bit of good news on that front. And I think the bad news is that the service exports this year, the net exports in the services is lower than what it was last year. So it presents a depressed, overall depressed trade scenario. And this is not happening in India alone. I think the same story is playing out in many other economies.
Sure. Let's also bring in Saugata Bhattacharya of Axis Bank into this conversation. Saugata, some color on exports first. And I was looking at the breakup because if you look at the larger export categories, year on year, obviously, we're still in negative territory. So whether we're looking at drugs and pharmaceuticals, absolutely flat. Organic, inorganic chemicals, the degrowth of 5%. Petroleum products, there's a degrowth of about 14% on a year-on-year basis. But as we just heard Mr. Joshi point out over there, the hope is that gems and jewelry, because there we've seen an increase even on a year-on-year manner. What's your sense, if at all we are to see a positive export number, by when do you think we'll see it in the coming months, if at all, and which sectors might lead us to it?
Well, I mean, your latter first, I agree with both what Dharmakirti, Mr. Joshi was saying, and then what I heard from you. That firstly, in terms of exports going again back into positive, because last year, a very large base effect would kick in from September onwards. September last year was about a 25% degrowth. So, I mean, from a 20% degrowth in August, we have already come pretty much up to flat, up to zero. So we should be in positive export growth for the next 4 or 5 months. I mean, so that's a given. It's not going to be very large, but we are still going to export more than we did in the same periods of the previous year. Having said this, I'm a bit worried about the export composition. Because one, the gems and jewelry growth that we have seen, the 8% growth year on year in August, despite a fall in gold imports that you would have seen as well. I'm not sure how this dynamic is going to play out. The other export categories remain pretty muted. I mean, exports of many agricultural commodities seems to be relatively positive. So if that carries on, that will help. If we can export more iron ore, I think that will going back up to, if not the previous levels that we had in the past. I think some of that would help with our deficit. But what worries me a lot is what we are seeing in textiles. Remember that there is now this debate going on in this country on how much our rupee, the Indian currency, should depreciate if exports, and particularly in the context of textiles, that we are becoming less and less competitive, more uncompetitive in terms of in textiles. I don't agree with that point of view, but that's something that is giving rise to concerns about, if you have seen the textile export numbers, in all of them, I mean, pretty much, I mean, everything is negative except in the RMG, the garment segment, which is also very, very weak positive. So that's one segment that I think needs a positive push.
Sure, yeah. I mean, just to put a number to what Saugata is saying, for cotton, yarn, fabric, made-ups, etc., we're down about 14% year on year. For man-made yarn and fabric, we're down about 8.5%. And even if you look at jute, which is not textiles, but as a separate sector, there's a degrowth coming in there as well. But Rupa, let me come to you on the other sort of part of this spectrum, and that is what's happening on the import front. The reason we're sitting here and talking about a fairly sanguine deficit number of around 7 odd billion is probably because of the fact that both gold and oil have been very benign. Gold imports still around that 1 billion band. And of course, there's a different debate out there about whether there's, a lot of smuggling, because the point that Saugata just made, you've got gems and jewelry exports rising, gold imports being where they are. Can we expect this trend to continue?
No, certainly not. But you see, I don't draw much comfort from the fact that imports are falling faster than exports, because, a very good leading indicator of Indian manufacturing sector activity is non-oil, non-precious metal imports. And 5-6 months ago, we had started seeing some improvement in these imports because the import intensity of Indian manufacturing is very high. But, again in last 3-4 months, these non-oil, non-precious metal imports are showing very high negative growth, which is worrisome. That shows continuation of broader weaknesses in Indian manufacturing sector. So we may draw some comfort from the fact that, we don't have any stress on the current account front. I think fundamentally external sector weaknesses are definitely of a worrying lot.
So I just want to get a quick comment from the panel on, of course, the burning debate of the hour. This is a story that CNBC TV 18 had broken earlier this morning, that there would be a meeting at some point next week where the Commerce Ministry and the Finance Ministry will look at different possibilities. How do you boost exports, and whether weakness of the currency can be one of those options? Your thoughts, let me come to you, Mr. Joshi, on this. Today we saw the reaction in the currency market. We saw the rupee close at around 67. Which side of the debate would you stand on when it comes to boosting exports?
Well, I think if you look at the history of exports in India, particularly after 2004, what you notice is that it's not the currency that's the dominant driver of export growth. It is the foreign demand. And I think between 2004 and 2008, currency actually appreciated and exports grew at their fastest pace. Now, I think so. You have to focus on increasing the overall competitiveness of exports. Price competitiveness alone via exchange rate is not going to help much.
Okay.
And I think, and there are costs associated with it. It pushes your inflation up. It makes your imports expensive. So I would say that I think we need to focus on increasing the overall competitiveness of exports. Just the currency will not bail us out. Okay.
So quick 30 last seconds, Saugata, coming back to you. There are officials within the Commerce Ministry and several other experts who argue that the Indian currency is actually a little, perhaps a little, overvalued at this point in time. The rupee has appreciated vis-a-vis some of its other emerging market peers.
Well, yes. I mean, if you look at the NER basket, I mean, the rupee has been remarkably stable compared to some of our. But I mean, countries like Bangladesh, Vietnam, Philippines have had currencies which were even more stable or maybe appreciated a little bit relative to the rupee. And their exports, particularly their textile exports to the US, where we have some data, shows that they have done much, much better than us, which seems to suggest that there are factors other than the currency, as Dharmakirti was mentioning, which have a role in explaining export growth of textiles.
All right, we leave it on that note. Thanks so much, Saugata, Mr. Joshi, as well as Ms. Rege for joining in into the conversation. So, Arundathi, there you have it. Steady data for the month of August, but the view is divided as to whether a weaker rupee is indeed the answer to all our export troubles.
Thank you so much.